Good morning. This is Dylan Jovine with Behind the Markets. No need to adjust your settings. I am actually wearing a dress shirt. Happy Friday. Today is Friday, October 4th. And the reason I'm wearing this dress shirt is that we're about to film this new documentary. And in this documentary, I'm really excited about, we just spent actually the last few months researching the housing market. And basically, I have a bunch of people that I know that make really good money, like really good money, above average income, and they have trouble affording a house. And these are like young couples that do very, very well. They have trouble actually buying a house. So I said, what is going on? How bad is the housing market? So I actually started to research. I wanted to answer that question. How bad is the housing market? And what I have found in the past 4 months has really surprised me. A couple of things I found. Number one, housing prices today are the highest they have ever been on record, since records have been kept. That means they are higher today than they were in 2006, 2007, right before the Great Recession. And the way you know that is you look at what we call a PI ratio, the price to income ratio. What does housing sell at in relation to incomes? And the average PI ratio for the past 50 years, it's been about 3.7, meaning that a house sells for about 3.7 times the average income. And right now, our average income is $74,000 a year, so a house should sell at 3 times that, $240,000, $250,000 a year. Okay, 260, maybe even 270. Right now, houses are selling at 5.7 times average income. Now, just to give you an idea of how high that really is, at the peak of the housing bubble that popped in 2008 that led us to the Great Recession, housing was trading at 4.7 times income. So it was a 4.7 times PI. In other words, this right now, housing is more expensive than it has ever been in recorded American history. Now that is crazy. So when I started to pull on this string and say to myself, wait, why are people who make good salaries unable to afford houses? The first thing I looked at was housing prices in relation to income. Then I started saying, well, what the heck is going on? How did this happen? And what I found actually, frankly, surprised me and really disheartened me. And it was so alarming to me that I said, we've got to tell this story. We've got to tell this story. Because what I found out actually was that Washington and Wall Street colluded and cut a secret deal, basically. Well, it's not even secret. I mean, there are provisions of the deal that are secret, but cut a deal that Franklin Delano Roosevelt had warned against, basically. And that has led to the current situation that we find ourselves in right now. I thought this was an important enough story that we had to get it to you, because not only does it affect the young people buying the houses, but it affects the housing market, which could crash, pop the bubble, and all of a sudden we saw how that happened. We saw this movie before. We saw what happened in 2008 when this happened, which led to the Great Recession. Well, this housing bubble is even bigger, and no one's even talking about it. So it's really like we're living in an alternate reality, frankly. There's so much cheap money sloshing around the system that valuations have just gone the way of the dodo bird. It's funny. And that happens from time to time. And those are actually times when we have to be careful, which is why I've been ringing the bell as much as I can. Anyway, that is why I'm dressed like this. I will speak to you later. I hope you have a wonderful, wonderful weekend, and I'll catch you on Monday.